Good evening, traders. So today is March the 17th, 2024. It is Sunday, and I'm just going to do a quick video. I already looked over a bunch of stuff this weekend, and nothing really has changed. There's nothing dramatic looking forward that I'd see. So I'll just kind of go over quickly some of the things that maybe stick out a little bit more to me. Starting out with the higher time frame, this is our monthly chart on the bottom right here. And we can see we're still in a strong uptrend on a monthly. So the monthly uptrend is intact, even though this last week, we closed essentially unchanged on the month. But we're still one time framing up for the past 5 months. So that's undeniable, right? And if we look at the weekly chart above here, let me put on my weekly profiles here too. But this weekly chart on the top right, you see clear uptrend on the weekly too. I just dropped just a rough trend line sometime last week. But we did close lower on this week, but it is an inside week. So we see pretty clearly here, this profile is 1 week. So this would be the previous week. And each one of these bars is a day. So we can see, let's close that back up. So we can see this week was inside of the previous week. So we didn't one time frame up again this week, but I consider that the one time framing is still intact because we also didn't go into balance or one time frame down on the week. So as far as last week, we had one gap up that was filled. We had 3 gap downs, I believe. Is that correct? Let's see. We had 2 gap downs last week, and both of those were filled as well. So we only one time framed up 1 time. We one time framed down 3 times last week. We had 2 neutral days. We had 0 trend days, so the others were normal variation days. No normal days. But we do have on this one day, we started having a trend day on Tuesday. We had a lot of excess at the lows. It opened up and a lot of excess, so good buyers coming in. Then we put in a pretty large set of singles, but that eventually did fill, so I don't call it a trend day at the end of the day, but it was a nice elongated profile. And that's where we've begun the one time framing down. Something to keep in mind, we're still in positive gamma, even though we are below our 0 gamma. So look at ES first here. This is our gamma levels, our call walls, and 0 gamma. So on ES, we're above our volatility trigger, quote unquote 0 gamma GWAT volatility trigger. But if we look at SPY, I pay a little more attention to the SPY part of that complex than ES when it comes to where the real support and resistance is. And I run these numbers in a more, I don't really want to give away the way that I do this, but the numbers are a little more solid than somebody like Spot Gamma does. So on SPY, QQQ, we're actually below that 0 gamma area. And we're right in the whole mess of where we have a lot of very negative put GEX. On Qs, we're a little bit above that area. We're below the volatility trigger, the 0 gamma. We're a little bit above our put support. But you can see on the Qs, we've been weaker, and we actually closed below this balance area. We're on SPY. You can see there's definitely more strength in SPY. And then IWM and the Dow is similar, and that we're really at the lows of our balance areas. The areas that I'm watching on ES for next week, a little clearer on this chart. So here's Friday's profile right here. We had a pullback with a poor high at 51.90. So depending on where we open up tomorrow, what the overnight does tonight, I'm going to be watching this area for some strength. If we can build above this area, have volume accept above here, then be looking for that previous high day the 5201 area, which is also 1 sigma up. Looking for, that would be my first target. And then it'd be this balance area up here. We have a very pronounced wide pocket with an anomaly up here around this 5216 area. And then we have another pullback high, which is actually our 2 sigma at 5222. I think the 2 sigma is actually 25, but it's close enough, you know, because the sigma levels aren't really levels so much. And those will change depending on how the volatility is priced. But that's what I'll be looking for the long side, is if we can get above the 5190, be looking to get back up into this distribution up here. And then above there, we'd look for continuation up. The interesting thing about the sigma levels is you know, on close to close volatility, the sigma levels are essentially the same for the week as they would be a 2 sigma on the day. So we can look and get an idea that our weekly expected move should be within this range. You know, so even though we may have a 30-point range in the day, we may only move 10 points close to close. Now on the downside, I'm looking for this one time framing down to continue. So take out the 61 area. I'm in a 67 area. Go with acceptance down here. If we have volume come in, be looking for 57 next. And then this 36 area, which is also the 2 sigma. And then its previous week low at 24. Let's see, get a little better idea what these levels look like with this past structure. So below 67 just starts, continues a one time framing. And then below 57, I think we can get a little more volatility down to our 2 sigma level. And let me see if there's anything else really that I wanted to point out. That's pretty much it. Monday, we don't really have any data for the U.S. There's Chinese retail sales. Tuesday, the Bank of Japan announcement, the Royal Bank of Australia announcement. So their rate announcements, and then the German zoo survey, Canadian CPI. But on Wednesday, we have FOMC, the announcement and the presser afterwards, UK CPI, which is relevant, and the New Zealand GDP. So things that aren't as relevant for our markets, but it may, may lead to some bias in one direction or the other. On Thursday, it'll be the Bank of England announcement, and we have US flash PMIs, UK flash PMIs also, the Philly Fed manufacturing survey, and Japanese CPI. And then on Friday, we have UK retail sales. Let's see. Just checking my other notes, see if there's anything else. I did look at CFTC data on other stuff. There wasn't anything else that was particularly interesting or that changed. They're still pretty short. Specs are pretty short on ES. They're still moving a little more short on NQ, but more neutral. Natural gas, some of the short pressure has been relieved off of it. Gold and silver, specs are still pretty long, and it's actually an interesting market to look at, with gold breaking above balance. While this loads, lumber, coffee, and cotton are all very long. As far as the currencies go, specs are long pound, but short yen, Canadian dollar, Swiss francs, and Australian dollars. So there wasn't anything really stuck out to me as something I want to pay attention to this week. The only thing really would be I don't think I looked at crude at all, on the specs on crude. But for gold, let's open this chart. So it wasn't gold I was thinking of. I don't remember what it was that. I don't know. So we'll just ignore that part. And let's see. Other data. I looked through some other stuff. The only other thing I found kind of interesting was this. On the this is a bullish percent indexes, which has to do with the buyer sell signals on point and figure. Not something I lean on very hard, but it's interesting. So if we look at an IC and S&P 500, they've been at the highs for a pretty long time. Both of these charts just been going kind of sideways. It's a little bit strange. But then if you look at NASDAQ, so very similar, but then the 100s, the NQ100, has really been moving lower, despite everything else really going sideways. I thought that was interesting that those 100 more tech components are getting much weaker on this chart. So that's about all I have for the weekend. I recommend definitely, if you're not already checking out my Substack, on my Substack, I'll have better updated numbers and levels that I'm looking at based on what we've done on the overnight, how we're positioned going into the open. So hope everyone enjoys the rest of their Sunday, and I'll see y'all tomorrow.